Good evening, everyone. Welcome to Admiral Markets. My name is Chris, and Nenad is with us today as well. Together, we're going to take a look at cultivating rock-solid confidence in your Forex trading. Before we dive into the topic, though, just some organizational messages that are important, such as the fact that this webinar is intended for a global audience. It may not be suitable for everyone. Please take a look at this link, admiralmarketsglobal.com, to find out if it is suitable and other conditions and details. Select your country of residence and then contact the appropriate entity. Also, trading for exchange or global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Just a heads up here, hosted by Admiral Markets. Please take a look at the link admiralmarkets.com. You'll find on the homepage more information about the MT4 Supreme. There's a typo there I see only now, but Supreme Edition, 50 plus extra features, a lot of them really cool stuff. So take a look at that, preferably after the webinar. Here you see actually a screenshot, and you can see the items kind of jumping out of the screen. Those are just a few of those extra features. There are 56 in total. Also, kindly, before we start the topic, kindly ask you to take a look at this. It's actually a competition, a contest. Admiral Markets has a chance to become the best MT4 broker at the UK Forex Awards, and we would love it if you would share your enthusiasm just as we do for voting by voting on Admiral Markets in this contest. And there is even a chance you could win an iPad. So it's a win-win situation. Take a look at my recent tweets, and you should see, or Admiral Markets tweets, or Nenad's tweets, and you will see a link that will bring you to a place where you can vote. All right. So hope to see many of you vote. That would be great. All right. So today we're going to talk about rock solid confidence, a vision for implementing the trading plan, focusing on our impact and not the market's impact, and then achieving consistency. That will be my part, just to be clear. And then Nenad, at the bottom of the hour, at 5:30 a.m. UK time, is going to take over and share his thoughts on this topic. All right, so basically, I'm going to show you, some slides here. What I'm going to do is actually kind of separate ideas that I think will help gather this confidence in trading, and basically present you all of these ideas one by one. I think that the first ideas are kind of like the basic set, and then as we go along, they get a bit more, for further traders. The first thing I think traders need to do is work on their market knowledge. This seems maybe, quite logical, but it's the place to start. The more we know about the market, the more we understand from it, the more we've looked at charts, the more we have pattern recognition, the more obviously secure and confident we are in our trading. Very simple. Same thing as driving a car. If you just started driving a car and you just passed your exam and you've had 10 hours under your belt, forget it. Most of us don't have that very secure feeling that we're in the car. It's still new, isn't it? Very logical. Trading is no different. If we have many hours under our belt, it's a whole different ball game than we just placed our third or fourth trade, obviously. If we've been trading for 5 years, totally different than if we've been trading for the second month. And to a certain degree, there's nothing we can do about that, but because we need to build that experience. But that's the next point. But what we can do is work on our market knowledge as intensively as we can and our schedule allows, and try to push as much as we can. What we can do is understand fundamentals, understand technicals like trends, patterns, support and resistance, and get knowledge from webinars like you're doing now and books. That's one thing. Knowledge is one thing. But the next thing, basically, is the experience. The experience is needed because knowledge is not enough to actually implement, uh, you know, implement our strategy, our method in real life. We need a translation from theory into reality, and that only experience can actually achieve. Let me just check one thing here. Actually, okay, I will switch the sequence here for a second. Okay, so experience basically is the element that we gain only personally. To a certain degree, I can transfer that to you, and there is certainly an element of that by talking, by emailing, by showing in a webinar, yes. But ultimately, the best experience is our own experience because that's where we learn the most because we've gone through it. So what does that mean? Basically, it means a lot of demo testing, a lot of demo trading, I should say paper trading, going back into the past, a lot of demo trading, a lot of low risk real trading, a lot of charting and a lot of analysis, a lot of looking at charts. To be honest, it's very simple. So many traders skip that step and don't do the homework or don't do enough homework. There's a rule that states that for every hour of trading, you should do 3 hours of testing. I think that's maybe quite tough, but just to give you an idea about how some people, rigorously approach it. I would say if you do 1-to-1 already, it's a great thing, right? 3-to-1 is quite demanding, but you get the point. So looking at the past is very important in Forex because patterns repeat, price action repeats. So by looking at it, we need to get we need to build that skill. We need to get a pattern recognition, uh, get better at that. And how can we do that? When going to the past, unconsciously, by looking at charts, you build a database in your memory. It might not be there right away, but the more you practice, the more you start recognizing these patterns, the quicker you'll start to do that in real life too. All right. If you have looked at 300 bull flags, or you've only looked at 2 bull flags, right? There's a huge gap in experience. It might not be the most exciting thing to do. I personally actually find it very interesting, so I'm lucky in that regard. But it's definitely very, I think, useful because, especially in the Forex, we see patterns repeating themselves so often. And that's why also Forex is a good, let's say, trading choice when compared to perhaps stocks and futures. That leads me naturally to the next point, which is actually trading room and the recap that Nenad does. Trading room on Tuesdays and Wednesday mornings and the recap. Although experience is best learned by ourselves, is the best teacher, obviously you can absorb a lot from others via a trading, for instance, via a recap, and that does kind of accelerate and speed up the learning process, certainly. So the good thing is that Admiral Markets has that, and you can find that by going to the Admiral Markets website and going to education and clicking on webinars. So that transfer of experiences is very useful, and you can basically check your own analysis with with whoever you're looking at. That could be me, that could be Nenad, or anyone else from the analytical team here at Admiral Markets. And you can see, do I have the same? Why don't I have the same? What's different? Doing that is an extra, reinforces the learning curve, because if you wait for someone to provide the analysis, then it's difficult to know, like, what would I have thought? If you first think and do the analysis and then match that, the learning process is even stronger. All right. Next tip that I think is important is specializing, eventually specializing in a method. Staying too long, too wide, basically knowing a bit about everything is, I think, not the way to go. It's of course needed at start, to get an idea about all the different options out there and to have a feeling what could suit you as a trader, what do other traders use, how does that look like, why did I use that? It's kind of exploration process, and that's fine. You should fully go with that flow, and I encourage that. But at one point down the road, you're going to have to focus on a method and a system that you think suits you, that is pleasant and easy for you to follow the trading plan. Now, to a certain degree, following a trading plan, any trading plan, is a bit difficult. So you don't want to become too, may I dare say, lazy that you think that following the trading plan is always uh, an ABC, is as easy as an ABC. You want to find a trading plan, obviously, that and a system that does match your psychology, but there's also an element of being disciplined and just indeed focusing on that plan and really implementing it. So it's a bit of both. When for instance, Nenad is looking on the recap on Monday and the system, he explains the setup and you feel comfortable with that, then it's also a question of following through on that. So anyhow, creating a niche and mastering it, very important. Gaining a lot of knowledge on a small topic, on a small field, small something, whether it's a awesome oscillator or it's the Camarilla indicator or it's fibs or it's waves or it's all up in the air. That's really depends on what system and method you want to focus on. But you definitely want to build a specific skill set. Maybe you love patterns, so you really focus on patterns, and that's your edge. That's the skill that you're building on. Only after you really feel that you've reached a high level on this particular niche, might it be worth moving on to something else. For instance, here's a screenshot. I didn't talk about that. Here you see a chart at the bottom. And for instance, maybe trading the reversal after divergence at the fib bounce, for instance. Uh, we have Harsh Run saying that he likes trading reversals, for instance. So it's a bit too, it goes into too many details to explain this, but it's a method indeed, looking for divergence and trading the bigger correction off of the fib to the fib target, for instance. And Hashmarin, maybe that would be better explained in a separate webinar, like for instance Wednesdays, where we take a look at strategy. And if you can't join live, that's okay, because it is recorded and it's on YouTube. All right, so I will make a note to talk about it on Wednesday. All right. So basically, the pyramid here or the levels that we go through is basically at the beginning, we're not so clued about what we know or don't know. We just start, and it's kind of like an unconscious um, fact that we're obviously not ready for trading. If you just start, you cannot be. And you don't even know maybe that you're not ready, or you don't know what you don't know. So it's a very basic starting spot, logically. Then you get to a position where you really know that actually you don't know as much as you should. Then you get to a level like, okay, I can analyze and I know what I think is important. You get more confidence, right? So I know that this is my system and I'm fine with that. I don't care about anything else. I'm confident about that. And then the next level is actually being so in flow and in sync with your system and method that the implementation goes automatically without thinking. That's when you drive a car for 10 years, you don't think about shifting the gear anymore. You don't think about um, making a left turn or a right turn or going on the highway. It's automatic. That's actually the highest level. Perhaps a level 5 could be, let's say, maybe the master trader, right? But in any case, that's the pyramid. So the funny thing is that as we move along the ladder, actually the knowledge from level 1 to 2 increases. But as our knowledge increases, our confusion goes up as well because we don't know how to filter that. That's the thing. But it doesn't mean that knowledge is bad. It's just confusion is actually a sign of progress, a sign of learning. Once we actually then go to level 3, we manage to simplify it again. We manage to filter out the knowledge and go back to simplicity like in level 1, but with more understanding and more confidence. Until actually level 4, we're trading probably just as simple as in level 1, but with a lot more experience, a lot better system, and a lot more knowledge. So we can manage that simplicity. A level 1, right, could trade simple, but ultimately fail because the market totally changes its character. Maybe that trader is trading very simply with the trend and the trend disappears and the trader doesn't even recognize that the trend is gone. That's what can happen to a level 1 trader. A very simple with the trend strategy could do perfect. But when the trend is gone, ultimately crashes. That's the difference, right? Simple but not knowledgeable, no experience. Level 4 has gone through all that knowledge, growth, but has managed to reduce it back to simplicity. This is what we talked about already. So, mental part and attitude. Obviously, the confidence is bigger if we're not at the beginning. Let's say if we've had some good experience already under our belt, we will have less excitement. Actually, if we're at the moment getting bored to a certain degree and not, the adrenaline is not pumping and rushing through our body, that's actually a better stage for consistent trading than if we're too excited. Problem with too much excitement is that the adrenaline is going to kind of interfere with our trading. So that is not good. We want to basically balance that emotional kind of excitement, that roller coaster, and get more into a routine perhaps. Get into a habit where we're just consistently following our plan and try to limit the emotional ups and downs. We also other things that we want to think about is positive thinking. It is quite fascinating how much our brain and our thoughts can actually limit us. And that's difficult to actually do if we've had a bad streak or for whatever reason our analysis is off or our performance is just not shining through. But and that's difficult with trading, but keeping that positive thinking is good for the confidence because envisioning ourselves as a winner, as a trader that can follow the plan at the end of the day, like I think I'm saying right here, envision yourself by following the plan, we can grow mentally to be more confident. There's a difference between envisioning ourselves as a winner in the sense of getting pips, making winning trades, or envisioning ourselves as following the plan. Ultimately, we want to see ourselves following the plan. And following the plan is what leads to profits. It's a better focused than envisioning ourselves winning, because then we might have wrong choices. They might be temporarily profitable, but maybe not in the long term. So eventually, the evolution of our thinking would be that at the beginning, we're still thinking, I can be a trader, then I will be a trader, and then I am a trader, because our confidence is kicking up our internal thoughts. We all have, funny enough, internal thoughts. We always weighing and analyzing and thinking. And from that point of view, it's good to, let's say, stimulate it in a certain direction, perhaps, right? When we do that, keeping a positive attitude is really good because it keeps us focused, motivated, inspired, and focused on success and not too bogged down. All right, so let's see. Caitlin says, I've been reading a lot of books and watched movies about the power of subconsciousness, but still a bit blocked because of the past experiences. Yes. Yeah, I totally understand that. And it's a difference between, knowing it, understanding it, and actually like putting it really into real life. That's difficult indeed. I totally agree. And I think that probably the best process is to take it step by step. Have small goals at the beginning. And maybe, for instance, think about um, try to focus on a trade, one trade throughout the whole day, and no matter what, approach it positive. If it's a win or loss, I think maybe start small. Because if we have a series of trades, we're going to throw ourselves into that. It's difficult to balance after that. It's going to lead to ups and downs. When you can handle one trade, then try two and see if you can do the same approach. Does that make sense, maybe? You think that could help? Maybe, yeah. It's 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 uh it's definitely not a simple thing to translate it, but it's definitely easier said than done, indeed. But ultimately, I think if you can handle one, because if you just start out like this, it's very difficult to handle a series. I think personally that that's just the most difficult part, that those ups and downs. Everyone is kind of fresh at the start, or I think so, more focused, but it kind of grinds down as the day goes through and more trades are taken and we get in a spiral and we might start revenge trading, get annoyed. So perhaps that could be something. Now, in any case, writing it down, I can be a good trader. Start with something that you think is realistic. I can be a good trader. If you don't have that confidence as yet, write it down and try to reinforce that and start with one trade. Connect with other traders. I know that sounds maybe not it's not something so common, but actually connecting I think is good. Connecting with traders, I think, sharing ideas, you think about things you never thought of, you talk about stuff, you bump into elements, you might get ideas about how you can improve your trading, share analysis. Not many traders do this, but by pushing yourself to to be accountable for your analysis is a great thing, because it means that you'll think about it better. You'll be sharper when you do your analysis, and you will be more, I think, sharper in following your trading plan too. And you will skip if your setups. And I don't know why it's for many traders, I think it's scary somehow. But start with a group of traders that you uh, trust, or that you have maybe a bit better, and just start sending those screenshots to each other and collect feedbacks. through Skypes and through emails. I think it's really, really, really very good process in learning. And as I said, I personally like it because it really pushes me myself. I think I have more accountability like that towards myself. And ultimately, it clears my thoughts about my trading plan even also. So I think it's really good. Now, I know that this is a big step somehow for a lot of traders. In my experience with traders, it's not easy. Start with one person and send it to them. And eventually, I think it will not be a barrier at all. It's just a question of getting over that hurdle. So start small, start always small. If it's a hurdle, start small and do it right away, but small. Now, I think important also is to learn from the trades we've done, but then also forgive ourselves and try to forget or at least forgive ourselves of the mistakes we've made, and then try to refocus back on the new trading day. Kind of start with a clean slate. Keep the flow of info moving. Don't get a brain freeze. Don't get scared or fear. Don't get too scared when trading because otherwise we'll just panic and exit the trade. And I think last but not least, this is important, I think, because it's step-by-step confidence that we need to achieve. It's a it's something that we will not get overnight, and that slowly but surely, as our analysis proves itself right, even if you don't want to share it with anyone, make a screenshot for yourself and keep track of that. All right. Something that goes step by step. What I personally recommend is to look at the market with kind of a neutral attitude. Don't see it as anything that actually warranties or merits, it doesn't deserve your energy because it's a neutral object. It's not something that will respond to you. In a way, it's like talking to a lamppost, right? So we don't do that, generally speaking. So why would we do that to the market? We want to treat it as an object that is just there, actually providing us the opportunities as forex traders. Doesn't make sense to blame it. Doesn't make sense to be fearful of it or become insecure of it. It's just there. Now, as a trader, it's better to focus on what we or you can do, which means improve our trading plan, gain experience, gain knowledge, and have a better trading plan implementation. Those are things that are in our control and have a lot more value on focusing than something that's not in our control. That's the market. It's out of our control. So many traders are insecure about themselves, but very secure about the market. They're very confident, for instance, that the market will do that or that, but insecure as a trader. So actually, preferably the other way around. In a way, insecurity about the market is logical because, but we don't want to get bogged down with that. But I mean, because no one knows what the market is doing. It's about probabilities. It's about capturing opportunity with proper risk management and the willingness to risk. And ultimately, we want to have, as a trader, a balanced psychology, balanced confidence, not overconfident and not too insecure. So yeah, that's basically it. Just the market gives us opportunity, and we want to have a focus on what we can improve and have a balanced confidence. So ultimately, know the market, specialize, gain experience yourself and through others, share your analysis, find the routine, find that boredom, learn, but then forget and focus again. Work on the subconscious, think positive, see yourself implementing the plan, and ultimately focus on what you can do and not what the market can't do. Those are the things I want to recommend. And last but not least, evaluations. Keep track of the performance and the progress. Okay, let's see. I have one comment here. I'm 20, know a lot of theories, but not a master of any. Shifting strategies too much, which causes frustration. Yes. Um, yes, indeed. Well, that's something, a good webinar for you. Well, actually, the same answer, kind of in a way. Wednesday strategy or Monday recap. Nenad talks about recaps, for instance. Wednesday, I talk about strategy. That could be very useful for you. It's definitely something that occurs to others, so you're not the only one out there because it is something that this up and down kind of pendulum effect between strategies and not kind of focusing on something occurs. So maybe it best is these webinars so that you can find the niche that fits you and that you will focus on. Okay? I'm going to pass it now over to Nenad and talk to you soon.
Thank you, Chris. Great presentation. So as always, guys, great to hear a good presentation. So yeah, I will start basically with the first slide. It's building up confidence. So Chris already talked about how you can build up your own confidence. But important thing to say is that we need to practice. As always, guys, when you practice something, usually when you go, for example, if you like to box or to punch bag, you need to know how to execute a punch, or if you play football, how to kick the ball. You cannot master that kind of kicking or punching by just doing a couple of times. Usually, for the right technique, you would need something like 1,000 repeatable good techniques. So you need to repeat it 1,000 times as it should be in order to basically capture the knowledge of a good kick or of a good punch. In trading, it's basically you need to practice, practice, and practice. You need to make 1,000 mistakes. You need to make 1,000 good trades in order to basically in order to figure out what the weakness within yourself is and what the weakness of the system is. Trading is psychology. It's only psychology game. So, as I always repeat, you might have a good system, but trading is always about psychology. Construction business is different. Other financial business is also different compared to trading. Marketing is something totally different, and trading is psychology. And psychology and nothing more than that. You need to have a strong desire. If you don't have a desire to win, if you're basically if you just want to call on Lady Luck to help you in your trading, you won't be successful in the long run. So you need to have a strong desire. Okay, strong desire. That's important. You need to want to succeed. If you don't want to succeed, guys, you will not succeed. Because I already talked about positive thinking and the law of the universe. If you have a desire to win and you really want to win and you practice that, you send positive thoughts, you will attract good wins. If you're always scared to pull the trigger, if you're always scared to test a system, then there is a problem, because fear will attract fear. Fear will attract insecureness. It will not make you confident. you will be horrified to pull a trigger, and that's problem. And Carolyn is saying, I think everyone wants to succeed in Forex, easy money, with no 9-to-5 job. It's not like that, Carolyn. Forex is not easy money. It's called beginner's curse, because beginners think that Forex is easy money. It's not like that, because the more you trade, the more you see that you basically time. You need to dedicate yourself, and that is, for me, for example, it's not 9-to-5 job. For me, it's 8-to-7 job. So basically, I'm working, and I have been working more than an average Joe who works, I don't know, in the bank, or I don't know, compare it to anyone. So my job is not 9-to-5, it's basically 8-to-7, and sometimes even I stay during the night if I have to. So that's basically a professional business. Yeah, and even for professionals, it's not easy money, because you need to invest the time to analyze. You need to know where to put orders. You need to manage your trades. But definitely, it's much better for me, in my opinion, than any other job, because I love this, and that is why I'm so eager to teach you and to help you. Okay. You need to make a plan also. You need to have a well-developed plan. And here the comment, Harris is saying, world's toughest job and well rewarded, if I understand that, at 20. Yeah, if you're 20 years old, you have a lot to learn, but you can be you can make your first step in Forex market. That's always the hardest step, but it will pay out. If you have strong desire, if you're thinking positively, if you have money, of course, you need to have money, because this is also an investment. You cannot start with a job without any money, right? Because if you want to trade Forex, you need to invest. If you want to sell, I don't know, let's say if you want to sell cars, you need to buy a car, then resell it, right? So you always need to invest before you start. Okay, it's your capital, and yes, it's your risk capital, and you need to define the risk always and make a plan. That is very important. Without a plan, guys, you will not be confident. That's very straightforward. You need to have a plan, and you need to define a goal. Without it, nothing is certain. Even then, it's not certain, but your chances are getting higher. So always make a plan and define a goal. You need to plan each trade carefully, not jumping in and out just because market goes up and down. You need to know when to enter, you need to know when to stop. When you make money, go out. Do something else. Do not stay staring at the screen, because the odds are that you will make another trade and you will lose. Okay? So plan each trade carefully. Be it a scalping trade, be it an intraday position trade. It doesn't matter. Scalp trades are also planned carefully. You must not, and you should never risk anything just because you think that the market will heed you or listen to your position. No, it doesn't go like that. You need to know where to enter. You need to know why you entered the position. It's not easy to manage the position, but ultimately it will pay out. Yes, it will pay out. Plan your trade. Did I mention my New Zealand dollar analysis today? That was perfectly planned. A lot of people thought that New Zealand dollar will go long because it was really having an upward momentum. And what happened today? It rejected. Yes. So I planned that very carefully. I waited for the Reserve Bank of New Zealand to basically cut the rates, but I have also waited to see market reaction. And market reaction instantly was, we will go long. Yes, market went long, but professionals fade because New Zealand dollar is in downtrend. It's not in uptrend. And I mentioned it yesterday. Do not follow the herd. Follow the big money. Follow big money. Big money is always professional money. Big money is called smart money. And that's why New Zealand dollar trade went successful, because I planned the trade. You also need to do that. You cannot jump in a trade just because there is a stochastic cross. No, you need to think about it. Protect your capital always. Always trade with low risk, because our first goal is to preserve our capital. Then multiply equity figure and then make profits. Okay? It's not the first goal to make profits. If you reverse it, then you will lose. Because if you change the first point for a third point, you will lose. If you're focused only to make money without protecting your capital, Forex will eat you. You can make money even by doing lower risk trades. Do it slowly, guys. Do it slowly. And gradually multiply your account. If you get a string of luck and Lady Luck smiles upon you and you double your account in 3 months, then, okay, step away. And remember my words, that was only a luck. You need to go step by step. Step by step. Take responsibility. You are responsible to what will happen on a trading account. Now that might be a little bit different if you trade in a group, because I was trading in a group, and I was trading in a group maybe till some 3-4 months ago. It's not every single day trading. It was a small group, and I was not happy with it because everyone thought that their orders will be winners. And then what happens is that we have a brainstorm of our opinions and no one wins. Usually the account suffers. So if you want to trade, yes, you listen to us, listen to me and Chris, listen to our analysis, but trade on your own. Group trading is not that good. Me and Chris can do it because we know each other good, and we know our methods, we know our strengths and weaknesses. But if you trade with a lot of people, for example, if you're a member of a trading room or a trading group, it will be hard to make money because, you know, it's a lot of different opinion, a lot of different strategies. You need to justify your entries. Take responsibility. Take it by your own. You are the most important person who makes decision. You cannot have that in Forex trading rooms. I don't particularly refer to trading room which Chris is a host of, because that is a trading room where Chris is solely responsible for entries. I'm talking about trading rooms where 3 or 4 different people try to trade together, making entries on their own. That's not good. I have experienced it and it's not good. Carolyn is asking, is a group of people using same strategy and rules? Okay, yes. Carolyn, if you have the group which uses completely the same strategy and rules, it's okay. But the problem is, because I have worked some, I will tell you, it was 5 years ago. And the problem is that everyone wanted to basically make a trade on their own opinion. And everyone in the group had different approach. I had different approach from my colleague, and that colleague had a different approach from, I can say, the head of trading in that time. and we all needed to justify our entries. That was not good because you always feel like you're confined within the rules and confined within the psychology which other traders just cannot understand. You might be a good trader. Your friend can be also a good trader, but your approach is different. And when you have a collision of two different approaches, it can be bad for the account because you won't be trading on your own. If you think that euro dollar will go long and he thinks that euro dollar will go short and you open a trade but your trade does not go your direction, who is to blame? Maybe you, but you're in the group. You didn't allow him to take that short trade, right? And the trade was lost. And then next time the roles might change. His trade might be a loser, your trade might be a winner. It's like a zero-sum game. It's not good. Okay? And that is why I'm saying take responsibility. You are responsible, guys. You are very responsible. I know what trading in a group. I also gave some permissions to one of the accounts for my good friend to trade, and he was not, and he traded basically because I have a lot of work and sometimes I cannot manage to trade 5 different accounts. I know that he's a good trader and I gave him permission to trade that one account. He lost a lot, but you know, now there is a rhetorical question. Is it my fault or is it his fault? Maybe it's 50-50 because I gave him the right and he just couldn't manage it. Well, I know he's a good trader, but you know, sometimes it's hard to tell who is to blame. Then I took things in my personal hands, and I'm trading by my own. And the only thing I can trade with, the only person I can trade with now is Chris, because me and Chris work in synergy, and we are creators of our strategies. We provide you with daily analysis. So it's different. You might see a statement which says, great, the account is in profit. But the thing is, if you don't follow the rules and if you step away, meaning that you give your account to other person who you think is a good trader, it's still your mistake. So it's your responsibility. Okay? And yeah, maybe my and Chris approaches are somehow different. He uses wave analysis, I use Camarilla MACD, but we both are successful traders and we both mix our strategies. And it's always good to have a trader who might have a different approach, but the opinion is the same. Because when you trade, you need to know about direction, about momentum, and trade management. That's most important, guys. Systems might be different, methods might be different, but my first book about Forex, which I read, was William Blaw's Momentum, Direction, Divergence. That's the truth in Forex market. Momentum, direction, divergence, or trade management. Pick, it's your choose. New Zealand dollar went down, euro dollar went up, then went down. We need to know when to enter. We need to know when to place a short, when to exit. It's the hardest part. And when to enter a long if we need to go long. That's the thing. Your system will give you clear entry if you know the momentum and the direction. Be rigid in rules, but be flexible in expectations. It's very important. Believe in yourself and your system. It's your first step towards building a self-confidence. This is a model, basically, which was adapted with a permission from Mr. Phelps from 1984, who basically made a program for athletes, but it's very similar for building self-confidence in Forex or other market. The thing is, you need to go through all of these things to get to the next matrix, which is the self-confidence, which will give you the utmost and the highest peak of your development as a Forex trader, which will be indeed athletic performance in Forex trading. Okay? You need to have a control. Okay? By having a control in performance accomplishment, you will have not the full control of yourself, but the emotional control or composure. It's your ability to maintain the control of your emotion in the face of adversity and remain positive. That's essential for winning. Okay? You need to be involved with the success of others. If you see that, for example, me and Chris are giving you good trades, which we really do, then you need to basically be involved with the success of others. So it's still a positive side, a positive thought, because instantly when you're involved with the success of others, you're sending a positive signal to the universe. Okay? Your emotional response will have an impact on your performance. But if your emotional response is positive, again, it will create a positive impulse toward your commitment. Okay? Very, very, I can say, it's not maybe the biggest point of all, but one of the most important things is verbal persuasion and imagery experience. It's something maybe strange to you, but for example, I went to some good behavioral classes, and those classes were something like NLP, something that you can read others by watching their gestures, and that was connected to positive thinking, some sort of, it was not a yoga, but something like positive thinking behavior. And we always had a verbal persuasion. For example, repeating that I feel good, I'm healthy. I feel good, I'm healthy. That verbal persuasion and imagery which creates before your eyes will be enough to really, really empower your whole body with positive energy, and you will feel healthy because you convince yourself that you are healthy. You do verbal persuasion and you imagine that you're healthy. I have read about a lot of people who have healed themselves by using verbal persuasion and different positive imagery. Really, I have read about it some 15 years ago, and there are still, and you can still read about it. Okay. So the thing is, if you trade, try to do a verbal persuasion. My trade will be a winner. I will win. Imagine that. Imagine that. And if you win that particular trade, it will be another point in your self-confidence. Psychological states are also important. Those are muscular tension. Those are emotional tension. And if you have butterflies in the stomach, that means that there is something wrong. Butterflies in the stomach can reduce feelings of confidence. Okay? You need to be relaxed. If you're feeling nervous, that is maybe because you did a trade which was over leveraged. It's not good. One of the examples. Okay? Psychological states or emotional states relate to how you will control the emotions which are associated with excitement and anxiety. Big entries can create anxiety and self-doubt. So it's critical that you as Forex trader learn to take control of your thoughts and emotions. Carolyn is saying that there was an experiment which athletes were imagining competing and their muscles contracted just as they were actually running, not just imagining. Yes, that's the truth, and that's the big truth also in your self-development. Mind is the most powerful thing in the universe. Mind. Okay? It's incredible how that the powerful is. Mind is. It's something which we can debate over days and days. I read a lot of books really about self-development, attend classes, and I have come to a conclusion that the mind is the most powerful thing in the universe. Okay? It doesn't matter the religion, it doesn't matter. The only thing which matters is how strong your belief is, how strong your will is, and on which frequency your mind is connected to universe. Okay? You need to understand everything of this, because everything which we have been talking about is aiming towards building up your confidence. You need to reflect on winnings. For efficient trading, always you need to be confident. Efficient trading will help you to build up confidence. Okay? Because confidence and good trading habits are directly proportional. Low level of confidence can cause a dent in your trading performance. Okay? Reflecting on one's own winnings can make one a winner. Progress slowly, guys, from smaller amounts to bigger amounts. That's very important. From smaller amounts to bigger amounts, okay? Don't think about big figures yet. Progress slowly. Failures are pillars of success, believe me. Losing trades are the best teachers that can teach you the trading skill, okay? Failures, not winners, failures. A simple losing trade must not be mixed with major failure. It must lead one to a series of winning trades. Okay? Proper record of the losing trade must be maintained in the trading journal so you can see your mistakes and don't repeat it in the future. That is the only through which minuses can be converted into positives. Seeing is believing. Believing is doing. If you're confident enough to achieve success, then there is no one who can stop you from winning. Okay? You need to move away from your computer after winning and losing trades. Seeing is believing, believing is doing. And building self-confidence goes through failures, not winnings. Believe me. Check your emotional level prior to trading. Start with optimism. We've been talking about this already. Don't be overexcited, because as you remember, if you start trading here, your emotions can become drowned. It's still a positive spiral, but it's not good to start from a big, I can say, when you are euphoric, big euphoria. It's not good. Start with not being euphoric, start by being optimistic. Relax by listening to binaural beats. If you are too excited, the chances are you might lose. You really might start to lose. Okay? So start optimistic. Relax if you're not relaxed by listening to binaural beats. Use lower lot size. Check your emotional levels as you make profits. If you started making profits, for example, you opened a trade on your trade was on your psychological scale optimistic. So you are optimistic that the trade will be a winner. If you see that you're in big profit, good profit, and you feel that you're very euphoric because your trade is in profit and the trade is very close to resistance, use confluence of your trading system and your emotional resistance. This is resistance. If the trade is going through the resistance, cut your profit, scale out, or secure it. Do not be greedy because market may turn. Okay? Market may turn. That's also the fact. If the market turns, then guys, well, there might be that you will lose a trade. From a winner trade, it might be a losing trade. Okay? Use lower lot size, you will be more relaxed. Check your emotional level as you make profits. Exit at psychological resistance, and then step away. Again, 1 point for your self-confidence. These are the rules. These are the rules of your building a confidence system. Now experience, which is very, very important, guys. From my experience, demo trading is good. Live trading is even better. But you know my opinion about testing methods of smaller live accounts. Yes, I support it. If you see that demo trading went well, you can switch to a smaller live account and test it, because live trading is not the same as demo trading. Test your strategy on live account. Open a $100 account and trade with 0.05. It will take a time to lose that account, or it will take a time to build that account, but it doesn't matter, because live account is always better than demo account. The best compromise between demo and live trading is testing good method which you have success on demo trading by opening smaller live account. Yes, 0.05, Kelly. You cannot do that on ECN account. You need to have standard account, but it's good because if you can make money on live account with that, then okay, open bigger live account and trade. But testing on live account is also good. If you can afford to invest, let's say $100. Screening time is also important. Screening time is something which you need to have in order to understand market waves. Okay? Desire for success, always. It should never let you down. If desire is not present, you won't be successful. Positive thinking will attract positive results. And maybe the biggest thing is respect, guys. Respect. If you don't respect the market, market will knock you down. You will not know when it will happen, but it will happen for sure. If you're successful in Forex, respect the market. Even if you lose, respect it. Because market will listen to you, it will come to you. By building self-confidence, you will go through a lot of different steps in becoming full-fledged Forex trader. I hope, guys, that this will help you. The question 0.05 isn't too much for $100. Well, it's testing, so you need to find a compromise. Basically, if you use a stop loss of, let's say, I don't know, 20, 30 pips, well, it could be, but if you want to just test if it's scalping strategy, whatever, then it isn't too much. But if you use 0.05 on, let's say, account which is suitable for intraday trading, then you should switch to 0.02, let's say. But it doesn't matter because $100 is $100. Either you will make something out of it or you will lose. But it's good because it will create that sense. Maybe trading instead of 0.05 with 0.02 or 0.01, it's not good because it will not give you the right feeling. It will not give you the right feeling of money management. That's why 0.05 is good, because you will still be careful about your trades. If you trade with 0.01 on $100, then you might open random trades which are not justified. But if you go with 0.05, you will think twice before you open a trade. That's good, because you won't be jumping on random trades, nor you will be making some revenge trades. And you will learn to respect Forex market and never say, I am the king, I am the god. Because if you think about it, okay, your account will suffer. Forex will revenge you. Okay, market is dangerous. So carefully follow it. Guys, this is it. Don't see any further questions. We can conclude the webinar. Thank you for listening. Sign up for our webinars. Next week there will be webinars. I will go on vacation from 3rd of August till 13th of August, so I will be back on 17th of August. So I will be here till the end of July, and then at the 17th of August we will have our session recap. Sign up, relax, and enjoy the profits from the last recap as always. Thank you guys for listening. We will be here with you soon. Cheers, and as always, trade safe.